So today we'll talk about why the stock markets are falling, because it's something that has been concerning to all of us as investors. Let's begin with a few fundamentals. Stock markets are like all other markets, which means that it's a function of finding a price by demand and supply, which essentially means that the number of buyers and the number of sellers will decide what the price will be. Now, what is the other thing that markets do or stock markets do? Stock markets are a mirror into the future. That means that if there is an uncertainty, if there is a bad economic outlook, if there is political instability, the markets will react or will discount it, as it is called, into their pricing, and you will see the markets falling. Similarly, if the future is looking very bright, there is political stability, companies and factories are doing very well, people are earning a lot of money, then markets will rise up. Now, what does it mean in today's circumstances? So COVID-19 is a very, very different situation. It's possibly a situation that markets haven't seen for almost the last 100 years. What does it tell you? It tells you that we are uncertain of how this is going to pan out. What will it do to our economy? What will it do to our future? So therefore, you see a lot of volatility in the markets. On a daily basis, we take a call whether this is affecting us, and it's not just about us, it's about the world, because our markets do not function in isolation. The Indian stock markets get affected by what the US markets are doing or how they are faring. And therefore, because we do not act in exclusion, every day the market takes into account what is happening in the world and what is happening in our country. So in the current circumstances, on an everyday basis, the markets take into account, with this pandemic, what is happening with the world? How will the world do? And therefore, there are certain days which are known to be good days, where you see that, for example, the US economy has given a lot of money to the country. The government has infused a lot of liquidity. So on those days, you will see markets really rise up. Certain days where it looks very gloomy, or you feel that there is, for example, there's been a complete shutdown of businesses, you will see the markets falling, or if there's uncertainty, you will see the markets falling. This is known, the everyday rise and fall is known as volatility. Now, I think over the next 2 weeks, we will probably gain a little bit more clarity on how the markets are going to pan out in the future, or what is going to happen to our economy in the short term. That means in the immediate term, in the 3 months or the 6 months period going ahead. So does this mean that this is a downward journey? No, it is not. It is more accentuated right now, because also we have a lot of foreign institutional players who are coming and selling into our markets, and therefore there's too much of selling pressure, wherein the buying demand is not coming in. So going forward, the market finds what is known as an equilibrium. If I were to explain it in a layman's term, for example, if the price of something that you consume becomes too high, something that you buy, for example, tomatoes, if the price becomes too high and you stop buying it or consuming it because it is too expensive, then there is a lot of stock of tomatoes which nobody is buying, and therefore the prices come down. The seller tries to sell it cheaper, and there comes a time when you think, okay, this is a great time to buy the tomatoes now. Similarly with stock markets and stocks, the market will find equilibrium. It will find a time when stocks are good enough to buy, they are at great valuation, and you will suddenly see a lot of buying interest come in. The buying interest will come in from our domestic institutions, mutual funds, as well as from investors like us. And therefore, when the market looks attractive to the rest of the investment community, you will see the demand surge and prices go up. This has been a regular episode in the markets. This time it is probably more sharper because of an event that we've not seen. Therefore, the other important thing that I would like to tell you is that big falls in markets are also big opportunities. Like the investment guru Warren Buffett says, that buy when it is cheap and sell when it is expensive. That means that when values of stocks come down, it is a great opportunity to buy into the markets or invest into the markets. And therefore, also the other thing that I would like to tell you is that typically markets are driven, it is said that markets are driven by fear and greed, which essentially means that when the rest of the world becomes greedy and the prices of the stock markets or the stock markets are booming is when you should have fear, or rather you should be a little cautious. Similarly, on the other hand, if the rest of the world is very fearful, very cautious, is actually a great opportunity for you to buy into stocks. So therefore, I hope I've been able to explain to you why markets are falling and what should somebody like us do in these markets. Should we panic? No, because we've taken into account that markets will fall and rise, like I keep on saying. If you have a great strategy, if you're a long-term investor, you have nothing to worry about.